Hey everybody, today's February 8th, and today we're going to talk about the stock market, right? In our last video, we talked about how we were really happy to see the S&P 500. This is a SPY representing the S&P 500 finally break above the 200-day, right? And we had this really strong break above, and a really strong run for 4 sessions. And I talked about how I believe that the stock market was going to pull back to the 200-day and retest the 200-day, right? It looks as though we may retest the 200-day. Bulls want to defend that level and bears want to break it. If defend it, I can see it move up to all-time high sooner than people expect. And that's exactly what happened, right? We ended up retesting the 200-day by pulling back, and this was last Friday. And I also talked about how this week, on February 10th, there's going to be the CPI print. And the bulls want a low print because that's going to suggest that the Fed might not be as aggressive with their tapering and interest rate hikes. And so the question is the market going to be able to hold this level, or are we going to break below? And before we begin this discussion, please read the disclaimer, and you can pause this video as you read it. Okay, so yeah, we ended up pulling back on Friday. I made this post, and I also talked about how there was some certain similarities from what we had in October, right? October, we didn't pull back to the 200-day, but we pulled back to the 100-day, which is this gold line, right? And what happened was the S&P 500, the stock market, it broke below the 100-day, but it recovered very quickly, and it came back to retest and touch this gold line, right? And we're seeing something very similar now, right? We're coming down a little lower to the 200-day, breaking back up again, strong bullish momentum, and then a retest, pull back to the 200-day, and just above the 200-day, cultivating support, right? Basically consolidating before a possible potential move higher. And you can see how the oscillators, right? The MACD and the RSI look very similar. We had cross here on the MACD and a very similar RSI numbers print in a similar lining up with a similar price action. So if this does follow a similar pattern, we can see a big breakout to all-time highs. Again, like I said, sooner than people expect, right? And right now, Tuesday, the stock market is doing its textbook consolidation where it goes up, retraces about 50% or a little less than 50%, moves sideways, bulls and bears trying to defend the 200-day moving average before potentially moving up higher, right? So that's what the bulls want to see. The bears definitely want to break the 200-day, right? But right now, the market looks very strong in terms of holding this support level, right? Because if you look closely, the S&P 500 hasn't touched the 200-day moving average, which is this blue line. So that's a good thing because that shows that there's a lot of bulls who are looking at this level, and they're trying to buy it, trying to absorb supply at this level, and they're trying really hard to defend this level and potentially cultivate this into a midterm support level that will help form a base to push up higher to retest all-time highs, right? But again, like I said in our previous video, we had a lot of consolidation over the last 3 months in this area, right? Which we are currently below. We had rejected about 460, which is not surprising because look at all of this price action, right? So I do expect there's to be some resistance around this level, maybe another retest before going higher. But the idea is that we definitely want to see the market make higher lows. The market can come down and retest. The bears can try to push the price down, but we definitely don't want to break this level, right? Let alone the 200-day. 200-day definitely for sure, but definitely not this level. We don't want to lose this level. So overall, the S&P 500 is looking quite bullish in terms of this being the first significant correction really since the election of 2020, right? Because we've had small dips along the 50-day or even the 100-day, but we haven't had a move back to the 200-day really in a long time, right? And although this was didn't touch the 200-day, this was when the moving averages were crossing, trying to go from bearish into bullish. But our first significant correction since we've had a bullish orientation of the moving averages, 50, 100, 200-day, suggesting a strong bullish trend, right? So again, let me just say that this is totally healthy in a strong bull market, right? We don't want to see the price action just go straight up parabolic, right? We want it to see the price action come and retest these moving averages, sometimes even going, giving us 10 to 12%. So this is a, I believe a 12%, yeah, 12% correction, right? And we'll have some dips along the way, but once in a while we'll get a more severe correction. And this definitely is triggered by the impending interest rate hikes and also tapering that's going to happen in March. The Fed already has committed to that in March. But again, like I said, one of the more important indicators is that we're going to see the CPI print on Thursday, February 10th. And I'll definitely update you either with a video or with a chart and see how the market reacts to that, because this is going to be a very important to foreshadow what the Fed might do in March. And so if the print is very low, I believe that the market is going to really like that, because that might suggest that the Fed might not be as aggressive with their tapering and or interest rate hikes, right? Because the whole reason why the Fed is being more aggressive with those tools is that we're seeing record inflations, inflation that we haven't seen since 1982, right? Like 7% inflation, right? It's just, everything's so expensive now, and a lot of that is to do with supply chain crisis that's happening right now, but also with the massive amount of liquidity that's flooded the market, money printing that's happened over the last, really just the last 2 years alone, just this decade alone, we printed trillions and trillions of dollars, right? It's just, so we're starting to see that reflected in the price of consumer goods, and that's affecting everyday Americans. And when things start to affect everyday Americans, that's when the Federal Reserve comes in, and they have to do what they can to protect the ordinary American citizen, right? So that's what the stock market is looking forward to. Trying to, again, just to summarize, trying to hold the 200-day ahead of the CPI print, which is in 2 days on Thursday, right? And I'll definitely update you with a video or a chart and seeing how the market reacts to that. And hopefully the bulls are able to defend the 200-day moving average, this blue line, cultivate a little bit more support before pushing up higher and attempting to break to all-time highs. Of course, I predict that there's going to be a lot of resistance because of all this price action, the inability to hold, and the fact that we broke below these moving averages, and of course, this short to medium term uptrend, right, by making a lower low. So what we want to see the price action do is continue to grind higher, and make higher lows and higher highs, and eventually hit the all-time high. And from there, we can reassess the situation and see if we're able to break through and create new all-time highs, or whether this might be more resistance and we might need more time to create support before pushing up higher. But that's a couple of weeks into the future, right? Into like March or April, and definitely March is going to be a wild month because, of course, with the Fed tapering and interest rate hikes, where people are trying to see if the market is trying to price this in already, or whether there's going to be more volatility to come, right? Speaking of volatility has definitely pulled back. I've said many times that usually when volatility spikes, it's a good time to fade it, right? I mean, historically, volatility has faded eventually, right? It's very rare where we have scenarios that, like the pandemic, where it just goes straight up to nearly 100, right? So usually doing long volatility is not, excuse me, a good bet. So yeah, just to finish it off, we have, excuse me, we have we're in the fear and greed index right now is at fear. Excuse me. And so yeah, there's definitely a lot of people who are trying to buy insurance, perhaps predicting that this might come down a little bit more. But the thing about the fear and greed index is that at the level right now, there's definitely a lot of upside, right? This indicator is not telling us that the market is, just throwing, caution out the wind, right? There are a lot of people who are still cautious, and they might be loading up on put options, or maybe they're shorting the market, anticipating that the CPI print is going to be bad, or that next month is going to be bad, and that the market is going to go down lower. But the fact that there's a lot of people still pessimistic, despite the fact that the market has made a nice recovered above the 200-day, and could potentially put in support to go up higher, tells me that there's still a lot of potential upside. So we'll definitely have to keep track of the fear and greed index, telling us when it becomes very, very overbought. But for now, to me, this seems like pretty good. That it just seems like there's a lot of potential upside. So again, definitely want to see in the next 2 days, especially on Thursday, we'll definitely update you, and we'll see if the S&P 500, the stock market, can defend the 200-day, and whether the market is going to lose it and come down lower. And that's it for today. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.